Hi everyone, and welcome back to Goyette, Ruano, and Thompson. So what we're going to talk about today is corporations and corporate governance. And this is a huge, extremely broad topic that we are contacted about some element of this every single day, multiple times a day, from startups to established companies. And so first let me introduce, to my left is Mr. Brandon Largent, my go-to associate on corporate matters, corporate structuring, corporate governance, and Brandon and I are working on a number of projects right now, including corporate litigation, which spells out or confirms for all of us what happens when your corporate structuring and your corporate governance isn't done correctly. Brandon, how are you doing today?
Well said. I'm very good. Thank you, Paul. Well said. It's unfortunate when the experience arises that you start to learn the pitfalls of a failure of corporate governance far too late in the game, particularly when litigation is ensued.
For sure, and I've been down that road myself. And as many of you know that are regular watchers of our videos and our podcasts, I own a number of businesses, have learned the hard way on many things when it comes to corporate structuring and governance. So I have a little bit of practical background as well as all our legal experience. So the first question I want to talk about, I'm going to ask Brandon about, is why incorporate at all? Why do we even need a separate corporate entity? Brandon, what do you say to that?
First comes to mind, most important, is the limited liability protection involved. And what this means, no matter the entity that is structured, whether it's an LLC or a corporation itself, and we'll get into some of that, the protection that exists to the owner or a member owner operator of their entity seeks to protect the individual and their assets separate and apart from the entity itself. So for example, if you were unfortunate enough to face some sort of litigation or a controversy related to your business, your personal assets such as your home, savings accounts, other assets are not going to be touched. I say generally that's the case because, as is well known, there's a popular term out there called piercing the corporate veil. There's a number of actions that can be brought against corporations or their owners for various breaches of fiduciary duties and so forth, in which the individual's assets could become exposed down the road. But generally, it's the limited liability protection that comes with creating an entity or amending an entity to proper governance after later discovering that perhaps its structure was set up in the wrong way. So that's first and foremost, is that protection that should always be sought.
And let me interrupt for a second. You mentioned entity. And my understanding is correctly that when you talk about your corporate structure or your corporate entity, that's a separate, standalone entity. It should be viewed entirely as its own animal, right?
Absolutely, absolutely. Common parlance out there that corporations are considered an individual under the law, if you will.
Okay.
And where that largely comes from is, again, this protection, this separate status of, say, for example, I own a company, whatever type, an LLC, for example. That LLC exists on its own with its own governance structure behind it versus me as the owner or principal operator or director in the entity itself.
That makes sense. And from a liability protective standpoint, I know that's a huge issue. As most of our listeners and viewers know, we're located here in California, which is the epicenter of litigation of the universe, I think. And so our business and corporate clients are sued on a highly regular basis for virtually anything and everything, which we can go into and have gone into later. But that's reason enough. Any other reasons why you'd want to set up this corporate entity or structure?
There's a number of reasons. I think a few that I'd like to highlight here today is, I've used the word a few times here as governance or corporate governance. What happens is when you choose the entity in question and then set up the corporate governance, I'm going to stick with LLCs, for example, a limited liability company. One of the first things you want to do after you choose to file in the particular state, items such as articles of incorporation. What happens thereafter is you're going to put together an operating agreement. It's a very principal governance foundational document that's going to set forth the rights, the duties, the obligations of multiple owners if there are. Say you and I are in business together and we're going to be member owners of an LLC. How much do you own? How much do I own? What are your rights and duties, or obligations and duties rather? Sure. Are you going to handle day-to-day managerial functions of the personnel at work? Am I going to handle the finances and more of the secretarial and administrative functions? We're going to spell out all of those things, and we're going to get into units and shares. So Very quickly for the audience, we always hear things about shares or shareholders when a corporation has shares that issues out to various owners, based on the percentage of ownership. LLCs, for example, limited liability companies have what are called units, synonymous, if you will, or practically operating in the same capacity as shares. So you will identify how many units you own in the company and how many I own. That also speaks to voting rights. If you and I want to, on anything, say we want to go out and get a line of credit for the operations of the business. Well, we both have says. We both have a say in that. The governance structure from the jump is certainly one of the most important pieces. This is what helps thwart litigation to include between partners potentially when a dispute arises in a company. Okay. Then lastly, one of the other principal things I wanted to touch on, certainly for startups, is banking and financial issues. Oftentimes, I think uniformly throughout all states in the United States, banking institutions require certain documents or governance documents of the entity. This is to start up a new business account, to consider whether they're going to extend lines of credit, conduct wire transfers, business-to-business transactions, all of those things. So having the right governance structure in place with the foundational documents for the entity, whichever type you choose, these are all pivotal. Again, whether it's a new startup, providing a product or service, or it's an existing business that perhaps has kind of sat quietly for a while for various reasons, or an owner has discovered they have a structural issue within their business and they need to change it. All of these governance documents can be altered to ensure the smooth transition into what the company was and now needs to be.
Cool. Well, that makes sense. And I can attest to the fact that if you've been in business at all, and not just in California, but in the United States, in fact, in the EU and globally, the banking system is highly temperamental, and it's got a lot more temperamental in, say, the last 5 years. It can work to your benefit if you have your corporate structuring and your banking done correctly. If you don't, you're going to have difficulty banking. Now, let me ask one final question on whether to incorporate or not. Does a corporation itself require a separate tax return, and does it generate itself a separate tax consequence?
Yes. Dependent upon the type of entity.
Sure.
So, and I've mentioned a number of times here, LLCs, I'll run down, once you select the type of entity, for example, limited liability corporations or LLCs, limited liability partnerships, LLPs, then into corporations broken down into what we often hear of S-Corps or C-Corps, will influence the decision making on what type of entity, based on the type of business you have, the size of the business, products or services that are being sold or provided. And so, for example, LLCs are a great benefit when you have, for tax purposes. They often is referred to pass-through taxation. So in other words, if we're going to imagine the LLC or the entity as a funnel, and the monies that are flowing through that funnel flow directly to and are taxed at the individual owner or member. Oftentimes this is referred to as a K-1. One business filing, tax filings occur annually. Once those are done, the income and or losses or whatever the final transaction is gets attached to your personal income tax filings, whereas a C-Corp does not have that pass-through capacity. A C-Corp will have its own corporate taxes it's responsible for, and then thereafter, after all cost, expenses, the accounting is fully taken place, and there may be a dividend that is pushed out to the various shareholders. Mm-hmm. Those shareholders are now going to be taxed on those dividends as well.
Gotcha.
So that's where you get into the double taxation aspect.
For a C corporation.
For a C corporation.
Okay, gotcha. Well, I can tell you that I am a big proponent, and again, having learned the hard way, of setting up your corporate structuring and then closely following the corporate formalities from a pure liability point of view, but also it's the right way to do business. It's a better way if you have your governance in order. It's the better way to keep your businesses separate, and if you have more than one business, it's important. The other thing I have benefited from and learned over the years that if in many startups, you're gonna lose money to start with. And it's important that you capture those losses because you can offset those losses against income or gains you have somewhere else in your financial life. So that can save you a lot of tax money. Okay, now that we've talked about whether to incorporate or not, and it's my recommendation that you do. If you have any business at all, even if you think your business is sole proprietorship, there are huge benefits to incorporate, and we can help you do that, and we help clients do this all day, every day. But then the next question that comes up from our clients all the time, and even internally with our own businesses, where to incorporate? Now, traditionally, Delaware seemed to be a lock on the place to incorporate, which I've never really understood why exactly, but I know there's another of options out there. So Brandon, on the question of, okay, now I've decided, yes, I'm going to incorporate. I'm not sure on what form I want yet, but you've convinced me setting up a corporate entity is a good idea. Where should I do it?
Great question. And there's a lot of great places. There's no one place that's very bad, but you mentioned Delaware. There's a lot of reasons why traditionally Delaware has been a place of destination for the incorporation of all levels of business. There's a lot of reasons to that. There's privacy and confidentiality issues that come in, particularly in this day and age where privacy in all facets of our digital life certainly seems to be at threat. Oftentimes folks don't want to be identified. If I have whatever corporation that I have and I've started, I may not want my name on a public-facing website with the principal place of business address, which might even be my home in some cases, out there. Now, that's not trying to usurp or thwart litigation, for example, if I'm doing bad deeds with my business and I'm not going to be discovered. That's not the case. It's just that the public-facing web portals from a number of these state registration sites in California, it identifies who's the CEO or who are the principals, directors, secretaries, treasurers, and the actual physical mailing address for a registered agent for process in the event that litigation or service of some legal papers need to come in. Other states, Delaware, for example, can provide enhanced security confidentiality, where there's a general state address where such documents can come into the state of Delaware to a central hub that operates as, say, for example, the registered agent for service of process. And then they are responsible to notify the actual business owner or the person designated from the business owner. That's one thing.
Okay, that makes sense. What's your favorite state to incorporate in, based on all the work you've done?
We've done an awful lot of work through Wyoming. Wyoming is favorable for a lot of reasons, but coming up, and I don't know if it's first or second, I'm very interested in Nevada. A few reasons. Nevada and Wyoming similarly don't have a state tax. They don't have a franchise tax issue when it comes to business. You not only are responsible for your first and or initial filing fees in incorporating the business, but you're responsible annually for updates, whether addresses change, whether certain identified members are no longer with or identified with the business, or annual reporting of income or loss statements, for example. All of these things that are required by states in Nevada and Wyoming, they have less regulatory red tape, if you will. There's less reporting requirements. Nevada, interestingly enough, has what's called the Nevada Business Court. This is an entirely separate court that has, I believe off the top of my head, 5 judges who all have a vast expertise in business law.
Boy, that's a switch. So this is separate and apart from the traditional Superior Court?
It's like a derivative of.
Holy cow.
It rides alongside of it.
Wow, that's interesting.
It exists to have efficiency in the court system.
Shocker.
Particularly when you get into business litigation issues. They specialize in matters such as corporate governance, when there's failed corporate governance, and folks are arguing about what the entity really is and who has what. Shareholder disputes related to the same. Shareholders of a company can accuse one another of some misdeed or fiduciary breach.
Sure.
Intellectual property disputes. The list goes on. And so Nevada, Wyoming, Delaware, these are all great states that seem to be sought after states for the business owner. I will caution, however, though, as Paul mentioned earlier, we're in California. If, in fact, you're a California-based business, you're free and clear to incorporate in Wyoming or Nevada, for example, or Delaware, after you address all of those formalities, pay those initial fees. If you're in California, you still will be registered as what they call a foreign entity, and you'll be subject to having to pay some fees to be able to do business in the state of California as well, despite being a registered Wyoming company or Nevada company.
Yeah, and I, in fact, have some Wyoming businesses myself that were incorporated in Wyoming, but are doing business here in California, and so we register as a foreign entity. We get calls from clients sometimes that ask, well, look, if I incorporate in, say, Wyoming or Nevada, maybe there's some tax avoidance that I can realize, and we have found that not to be the case. This is really a matter of corporate structuring. Your tax situation, your tax consequences are going to be affected by where you generate your money, where you're domiciled. And in California, for example, you're going to register here as a foreign entity, And there's really, this whole process is not designed to hide anything. Right. Okay, so Nevada is attractive, Wyoming's attractive, Delaware is very traditional but also attractive, but some states, and we know California, require that if you're doing business here, you have to register as a foreign entity. Okay, Brandon, so now a new client is called in. A client asks should they incorporate or not. We've convinced them, yes, that's definitely a good idea. We're going to set up their corporate entity or entities plural in, say, Wyoming, for example. Then the next question that always comes up is, what entity should I set up? What do I need? What are the options out there? LLCs and corporations and S-Corps and C-Corps and partnerships and limited partnerships and general partnerships. What is it?
Somewhat of a case-by-case specific basis. We really need to hear from and digest, what the client's needs are. What is the existing business or opportunity that they want to start off on? For example, one of the first things that comes to mind is those businesses that conduct professional services, often medical doctors, dentists, in some cases general contractors and builders.
Law firms.
Law firms. We've dealt with currently dealing with all of these types of professional license holders that are business owners in this state and elsewhere. One such example why I brought up professional corporations, or a PC, is if you have a business, certainly at least in the state of California, in which the employees are going to be providing professional services that require a license. You mentioned the law firm or a law firm. I mentioned a dentist or a doctor. Such entities need to be and are required to be set up as a professional corporation or PC, and there's subsequent steps thereafter where after the articles of incorporation are filed, the entity is stood up, there's separate regulatory requirements that have various governing bodies that oversee those professional licenses to ensure that the governance is being handled appropriately.
So for like lawyers, for example, that would be the State Bar of California.
Perfect, absolutely. Or the CSLB, I believe, the California State Licensing Board for Contractors. There's all these various oversight or governing authorities for each of the professional occupations. So there's a version, professional corporations. We've mentioned an awful lot about limited liability companies, limited liability partnerships, LLPs. Largely an LLC and an LLP are very similar. However, an LLP gets more into the management of day-to-day operations. Say there's 4 owners or principals of the business where all 4 owners are going to have an equal right, if you will, in the management, day-to-day operations and governance of their company. An LLC can be either manager-managed, i.e. I'm the owner and I'm very interested in my human resources, my policy, my employees, the day-to-day operations. Or I may not be, and I want to have a managed or a designated individual to handle the management of day-to-day operations, the personnel, hiring, onboarding, so you can structure it how you want it to be. Corporations, we've mentioned C-Corps and S-Corps. What are they? I mean, really the funny thing is where those names come from is the IRS code itself. Yeah. Subsection C, subsection S defines the rules and regulations related to how these companies can operate, how taxes work and pass through or not. There's membership organizations. We deal with that a lot here at the firm.
I was going to ask you about that.
Membership organizations are stood up in a similar but different way.
What is a membership organization?
Oftentimes referred to as a union. Folks out there, whether in public and or private employment, you have unions and or independent employee associations. They're looking to bring their body of employees together with their own bylaws, their governance documents. They're going to have an executive board in a lot of cases, the president, vice president, treasurer, secretary, etc., and various other board officers, if so designated. It speaks to their ability to vote and their voting power. It speaks to their ability to engage in contracts with third parties, keep and maintain banking, issue and author checks on behalf of the organization. In some cases, these can become 501c3 nonprofits that are registered through not only the state that they're organized under, but with the federal government itself, both initially and in ongoing annual updates to those entities.
You know, and that reminds me, we've been contacted by churches and religious organizations that have wanted to set up private membership or associations of various forms. Sometimes they have a medical component to them as well. Sure. They're spiritual organizations or they're flat out just churches, all of which are looking for some kind of tax exempt status. Would that be another example of a private membership association?
Absolutely, absolutely. Under often called a ministry, they'll have a ministry set up with those members of the ministry that organize under a particular organization with some governance documents, and sometimes seeking tax relief benefits from that, and in other cases, their ability to get together and practice their particular religion of choice.
Gotcha.
And observe certain rituals that they may be a part of and have their sincere held beliefs founded upon. So there's an awful lot of entities out there.
Okay, so before we wrap up today, I have one other thing I want to ask you about, but let me just get this straight in my head. So we have partnerships. So those could be LLP, a limited liability partnership. I've also heard the term general partnerships. Sure. As well. Then we have LLCs, which is a limited liability corporation. Then we have corporations, and the different kinds are S-Corps, capital letter S or capital letter C. Professional. You have C-Corps. We have PCs, professional corporations, and that's really depending on the type of business or profession you're involved in. Absolutely. Okay, and then we have private membership associations that you mentioned before. Other question that comes up a lot, how do trusts fit into this? And are they compatible with any of these corporate entities? Can a trust actually be a shareholder or a member or a unit holder of an LLC, for example? How do those fit together very generally?
That's a great question. The answer is yes, and we've encountered this a number of times, in fact, presently, where an individual or a couple, say for example, and they have children, have a family trust already set up and in existence, and they have a business that they're starting up, and their desire is to have the trust be the owner of the business, which is a really unique and thoughtful way of setting up businesses. So in other words, the trust kind of becomes the holding company or umbrella, which provides longevity as well.
And the trust is an entity in and of itself.
In and of itself.
Got it.
And so hovering above this flow chart, you have the family trust of so-and-so. And then below that, you have an LLC. And that LLC in its governing documents identifies who the sole owner member is, which is the family trust of so-and-so. The manager with the authority to sign on behalf of, with authority and control of the trust is, say for example, me, and my signature is on that. So the family trust owns an LLC, and then from there the LLC also has companies splitting off of it.
Gotcha.
Maybe even a professional corporation, or a professional corporation because the purpose in existence for that sub company is one in which is a professional service requiring the licensure. Now, the great thing at the end of all this, which there's two parts to this. One of the creative things that I found through doing this type of work specific to a trust is it builds in longevity. So say, for example, the young children, 3 or 4 or 5 of them, however many there are, upon reaching the age of maturity of fill in the blank as desired by the patriarch and matriarch who started it, can take and accept a certain amount of ownership and control in one of these businesses that the trust owns. So as the children grow up through this family.
Oh, you could have a built-in succession plan.
Absolutely, that's what it operates as.
That's interesting.
So there's the succession planning involved there, and then separately, there's enhanced protections as well. So say, for example, one of the companies falling below the holding company is involved in some sort of litigation or has a significant dispute, which happens. Not all of the entities that are tied together are implicated or essentially becoming a defendant.
That's huge. And ladies and gentlemen, when I talk about trusts, I'm talking about traditional family estate planning trusts, not exotic trusts, for example, in the Cayman Islands or anything. With that conversation for a separate video. Okay, so Brandon, just to wrap up for today, and this is super useful information, how do you decide? And I know that's probably not a fair question because there's probably, I bet the answer is it depends on 100 factors. Yeah. But clients come to us, they decide, okay, yes, I'm going to incorporate, we're going to incorporate in the state of Wyoming, but I'm unsure. What do you recommend?
Yeah, it's going to be the conversation for sure. One of the main things that drives my day in these conversations and this work is, number one, we got to find out what the client's needs are, and then number two, how can we get there? That there being the appropriate entity set up with both the accounting for the least amount of time and money. If we take a call and take in the information as to, I'm just starting this thing out, there's 2 of us.
Yeah.
Hey, I'm going to say you're probably going to want an LLC,
Yeah.
and we're going to want to do it here.
Keep it simple.
It's not going to cost that much money. As you scale and grow, we can do a quick conversion at the IRS, both with your governance documents and at the IRS, identifying you have gone from an LLC to, say, an S-Corp, for example, for tax purposes. These are easy administrative changes with a little bit of cost on the filing fees. But it's really going to be driven by what the client's business is, what their interest is, and how they want to scale and grow. And I always operate from the standpoint of perpetual existence. And I kind of touched on this a little bit in our discussion.
Yeah, what do you mean by that?
So incorporating, and one of the more profound reasons to do so, depending even for very small businesses, family-owned operations, there's a perpetual existence for the incorporation. In other words, if I'm the owner of a business and I choose to, or I'm not operating it well, I've stepped away, I have other interests, I pass away prematurely or otherwise, the corporation is still in existence.
Gotcha.
It can be stepped in by the next generation to take it over and revive it, run it. Or incorporation and perpetual existence also is attractive to those who may want to buy, and you may want to sell.
You might be able to sell that business.
So it's a separate and distinct entity away from me as the owner that is going to survive me and perhaps flourish, under those who take it over, in my absence.
So if I'm hearing you correctly, just to finish up, the type of corporate entity that a client might need is really going to be dependent on their type of their business and what their objectives and goals are.
100%. And sometimes folks will come to you with a scenario and say, this is why I think I should be, for example, a C-Corp. And I'm going to immediately try to help that person understand, hold on a minute. You're going to save a lot of headaches, a lot of regulation, a lot of red tape, tax money, and otherwise. You don't need to be that right now. And let me explain why. So, the goal here again is there's a lot of administrative paperwork, a lot of filing, a lot of not complicated operations, but time-consuming operations depending upon the state, depending upon the type of entity. How we can get you to what you need as quickly and as efficiently and with the least amount of money spent, that's what we're going to do, unless you have much larger plans.
Well, thanks so much, ladies and gentlemen, for joining us this afternoon. Brandon, brother, thanks a million. Absolutely. Great work. Thanks for keep it up. Obviously, this is a complicated area, and it behooves you to do it right from the very, very start. So I'd urge you to reach out to us and get some advice to us before you proceed. Thanks, and we'll see you on the next one.
Thank you.